the problem I have in life is that a lot of people hate me. I wish instead of being me, I was a VC, a venture capitalist, because only two people hate venture capitalists. Those that the VCs don't fund and those that the VCs fund. Only these two people hate VCs. Right? As in, yeah, the ones who they fund love them for some time, and eventually they realize that slogan about vulture capitalists, etc., really has some merit to that. Right? With that kind introduction, I'm going to start inviting these people on stage. So there's a not very prominent name in the startup space. Most of you may not have heard of it. It's called Mahesh Murthy. Okay, so please welcome Mahesh Murthy on stage. Sandeep Singhal, Guruji, Nexus Venture Partners, welcome on stage. Karthik, Reddy, David and Goliath, right? The David is also here today. Come, let's take these guys on. So, Karthik, I did not see where you were in the audience, but I could see the two of them. So, excellent. So, you know the spirit in which we are going, right? So, the reason I have to say this is that you guys are all big shots, right? You have like so much money that as soon as you leave from here, I'll be checking the chairs to see how much I can gain from what you have accidentally dropped on here, right? So I'm just going to like begin by first allowing you to do, okay, so we are not talking about you individuals or your specific funds, okay, keep that in mind, it's not that. I know that more than anybody in this audience, you know what is wrong with the VC space, right? So let's just begin talking about what you see as the problems and what you see should be done better. Anybody? Mahesh.
Yeah, in fact, when Ajeet invited me to this anti-gyan session, I said, "Mira, मैं जो कहता हूँ anti-gyan ही होता है." So I have nothing different to say. Okay, a few things are wrong. We have too much money. And the problem is when you have a fund which has 5, 6, 7,000 crores to invest, there's no way you can actually fund startups. And so there are billion-dollar funds focused on startups. It's completely meaningless. Second, we have too little time. We all follow the US model of 8+2, 9+2, and so on and so forth, which means you have 2, 3 years to invest, another 4, 5, 6 years to try to harvest the companies and get out there. No way any Indian company is going to come towards anything investable or harvestable in this 5, 6, 7 year period. So we are completely wrongly structured. Right? So hence you will see as a result, and not too many people have talked about the fact that since the inception, 80-odd billion dollars has come into India, only 41 billion has gone out. So as a country, we may be, because of Mr. Modi, great, investable and all that, but we actually suck in terms of giving money back to investors, right? So the reason for this is our greed. I want to have 2 and 20 on a billion. I don't want to have 2 and 20 on 10 million. Right? So somebody starts a 10 million fund, and I'm one of them. You know, start first fund 15 million, second fund 55 million, third fund, my next fund is going to be bigger, and so on and so forth. So we are working for that 2 as opposed to for the 20, and which is why we keep having larger fund sizes, and the larger the fund size, the lower the returns, the crappier the investments.
So before next, I'll invite you to, of course, talk about your pet peeves, but I'm also requesting you to add to your answer the fear that the VC model, which Mahesh has also about, is a kind of a Ponzi scheme, where evaluations are being done on deals and valuation, not on exits. Like we have never, at any point in the history of VC, returned more money than we have taken. But along with your pet peeves, Sandeep.
Actually, I have.
You have?
Yeah, first fund, we had a 4x fund. Second one, we've returned 4x cash on cash.
Fantastic. We bow down to you, Mahesh.
Please.
We all do. I think, because Mahesh has just told me that I should not be in this space, because all his pet peeves is what we do, right? We take 220 on $1 billion.
Yeah, 220 on $1 billion, right?
But I would agree with Mahesh. I think on all the points that there is probably a lot more capital right now than can be absorbed in the market, and in a time frame that the funds are working with, right? India is a slower market, and you have to think about how are you going to return. Every LP expects 3 to 4x. So you're talking about if you're investing over $1 billion, then you have to return 4 billion. Where is the 4 billion value going to be created in India? So I completely agree.
Cool. Karthik, I hope you have an entirely different take, and you're going to like slaughter both of these guys. Really, that's what I'm hoping.
Well, there's nothing to slaughter. I think we're all collectively responsible. So I feel like, so I'm a little later, junior here. So I came 5 years ago, and both of them have been at it for 10 and 15 years. Each 15 years in various avatars. And my first realization when we started in 2010-11 was that it felt like not enough work was done to educate people on what even venture capital is. And it's like, even as I walked, I mean, I didn't game it, but we did announce our fund closure this week, right? So every third person is congratulating us. I say, ab to bahut paise honge. So my point is,
So have the wealth managers come and started saying, boss, you know, can we?
thankfully no.
They're all waiting there.
So the problem seems to be that, you know, we haven't even explained how the venture capital cycle works, to Mahesh's point, to the entrepreneurs in the audience and in the country. So everyone thinks that there are these miraculous pockets where a viable business in their eyes should be funded by us. And we haven't really gone about any process of educating them. And that's on the entry side. And on the exit side, I don't think we have a plan, even today. So we don't have a concerted effort as an industry to figure out how the hell do we exit. So, you know, it took iSpirit, till 3 years ago to figure out that bloody hell, unless some industry body comes and builds a process for cross-border M&A or domestic M&A, this might never happen. And Mahesh's point to IPOs is one valid point, but there's no venture ecosystem in the world which has delivered, you know, less than 80–90% of their exits as anything but trade sales. And we're not a country which knows, you know, I'm generalizing, but deliberately, knows how to do M&A. And how the hell are we building a venture ecosystem where you can't do M&A? So there are these deep flaws, but also I think the slack you have to cut, the industry per se, it's all of practically speaking, 10, 12 years old. And a cycle the first cycles take that long to build. I mean, and the funds which have broken out first or returned capital are the real small funds, as Mahesh says. The big ones are still returning money. So I might be wrong on some facts, but this is my take.
Sandeep, do you have something to
Essentially,
add?
Karthik is saying, and I agree that we are all clueless, I think.
Right.
So the question is, why did these funds become the size they did, right? I think that's a very important sort of, you know, point to discuss. So the entrepreneurs actually, you know, what you see is the amount of capital that is being raised went up in the last 2 to 3 years. And that's when these large funds emerged, right? So what you saw was $100 million rounds were being raised. We spoke about one of the companies that was in our portfolio. And the money just got wasted, right? And I think we hold ourselves responsible that we weren't there to stop that money just sort of disappearing, right? So that learning in that ecosystem, that how do you build sustainable businesses, is something that comes from pain. And we have gone through a cycle of working with entrepreneurs that haven't seen that pain.
Right.
So
you know, just like we talk about companies being overfunded, I think our industry has been overfunded. I mean, we're seeing that correction now. You know, Tiger is kind of dum daba ke bhag gaya, gone away. The only other big guy, Naspers, has pretty much sold all of his business to somebody else at a loss and said, tum chalao bhaiya, main ek passive investor hoonga. There are no big guys anymore. So 2-3 years ago, there was this big India story, as in, you know, give that big chunk of your asset allocation to emerging markets, emerging economy, blah, 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 India. Well, we just don't have the ability to absorb that money because, and I've been saying it for a few years, and interestingly, I saw, you know, this guy Shamat from Facebook said yesterday, saying, look, the copy-paste China model doesn't work in India. You can't sit back and say, let's do a copy-paste of some Chinese company in India, copy-paste of some American company in India. And because of that, because a lot of the money came in saying, let's build the Amazon of India, let's build the, you know, XYZ of India, and all of those names are floundering for one reason or the other. So everybody's pulled back and said, okay, fine, our original thesis of doing a copy-paste doesn't work. The China model doesn't work in India. Well, nobody knows what else works. So hence, money's gone back. So there's been an expansion. Suddenly, there is a contraction. There are no big guys here anymore.
Right, so what I'm going to do is, having discussed at a macro level the dynamics of the space, I'll get down to a micro level because the predominant audience here is entrepreneurs, not industry guys, so they are also present here. So they want to understand this a little more. Karthik has already said we are not educated about it. I'm going to begin getting the response from you, Sandeep, because of a specific reason which I'll explain. So here are some common beliefs, though media might have misrepresented some of this, or rather, you know, overemphasized some parts of it. One of them, you know, where we call VCs vulture capitals, is based on the fact that the very incentive structure of a VC is based on pumping up an organization and then dumping it, and probably after that point of time, the organization could become lifeless, and there are at least some examples that prove that might be correct. Second thing is how, despite their usually stated position, the term sheets of startups tend to be, of VCs tend to be so draconian that at various points of time, they can exercise like almost any rights that they have. Are VCs and entrepreneurs really partners, or are they on opposite sides of the table? Should entrepreneurs, when they talk to you, and this is to everybody, but I'm beginning with Sandeep, really be looking for partnership, or is it like, a negotiated trade deal?
It's a fair question. As a minority investor with some fiduciary responsibility to our investors, we have to ask for a certain set of rights. However, whenever you meet a entrepreneur, if you believe that you're going to use those papers at any point in time, don't make the investment. That's my belief. I don't know if all investors follow that, but if you think, so there's a company that I've been talking to where I actually said halfway through the discussion, I said, the way we are negotiating these terms, I think I'm not the right investor for you. There was another investor on the table. I said, I'm willing to walk away. I've done all the work. I've done the diligence, everything else. Let the other person go with it. And so it's I personally believe that although you ask for all these terms and so on, they don't really matter.
I have a different take on this. I'll come back to the earlier point, which is, why are we called vulture investors, right? Again, it's a construct of the business. So we take this huge chunk of money, and we've got 8 years to deploy it and return it, 8 or 9 years. So I take 2-3 years finding companies and have 4-5 years left. So what do I do in 4-5 years? I desperately try to pump the company to the point that I can, exit. How can I exit? There's almost no room for going public in 5 years' time. The only kind of exit is topi, is a topi exit, which is, can I find another guy, another fund to put a topi on? So what, I don't know you, hold on.
Do you specifically dislike Sandeep? Is
No,
another
I
question.
really love this guy.
So
he and I have been together for
Harshada,
16 years.
it's now Mahesh and Sandeep.
Right, so then it comes time. So what do you do? So what happens in the topi? So essentially you say, I have to palm this company off before this point. I can't IPO it, right? The thing is, if you IPO the company, the entrepreneur retains control. If you topi or sell a company, the entrepreneur loses the company, almost always, right? So I'll tell you, I mean, it was terrible for me to say, okay, yeah, we helped, funny, I don't know if he's in the audience, helped grow Redbus, did an extraordinary job, and in the 7th year we said, no, we have to go. And he built an extraordinary company, and he walked away with some money, and he's lost his company. So the point of the process is we go through this process, and we don't give enough time for that company or that entrepreneur to survive. What happens is the entrepreneur ends up losing his business. So what are we promoting? If you look at it, our heroes are lifetime entrepreneurs, whether it's a JRD Tata or Ambani or a Branson or whoever. But we don't promote any lifetime entrepreneurs. We're only promoting short hump and dump serial entrepreneurs. So in some ways, we're kind of antithetical to the entire idea of lifetime entrepreneurship, because we want these small pops. Make your 20-50 crores go away, make your 20-50 crores go away. That's really what we're pushing. And
Sandeep,
that's the problem.
structurally, is that what VC is trying to promote?
No, I think I would disagree. I think there is obviously over the course of the last decade, maybe even I would say from 95 onwards, growth has been given more value globally as far as, the early stage ecosystem as well as companies going to IPO and so on. You heard Dheeraj speak yesterday. At a $1 billion revenue, he's still trying to get 70 to 80% growth because that's what the public markets are valuing, right? So I think this whole notion, what Mahesh is saying is that you're trying to just pump up a company and get it to, to dump it onto the next topi or whatever he's calling. I think that's not the case. You are.
Topi nahi dalta.
So I think the issue is that even if you're looking for an IPO, there is a need to sort of continue driving growth, which is what you are trying to build from day one, right? You're trying to build that culture of growth, and that's what startups have to do. If you're building a business, the first year doing $1 million in revenue, and the next year you're going to grow 10%. At some point, it doesn't work, right? So you have to have that mindset that you will eventually grow into a large business, and that cannot happen over 50 years.
But Sandeep, to take point, I mean, how does growth happen out here? I mean, even in the US, Google took 11 years to IPO, right? Facebook IPO'd in its 10th year, right? And my issue right here is that even in India, a company takes much longer. Just Dial took 17 years to IPO, right? So how do you access it? So nobody has the time to wait 17 years. Hold on. Let me finish my point, right? So what do? So you essentially say, chalo, ye lo marketing dalo, buy the front page of Times of India, go advertise on all the channels with lovely ladies who are sitting out here, and valuation badhao, right? Or you build this entire business which has all growth on top line and all negative growth on bottom line. Because you say, I want to show top line growth.
But Mahesh, I think that's where, if you work with the right entrepreneur and you have that clear mindset that it is going to take 17 years to sort of build out the business or 20 years to go IPO, and their desire is to IPO at some point in time, and you say, okay, I'm here with you for the next 7 years. Let's plan this so that in 7 years' time, or in the 6th year or the 5th year, whenever, you are looking for another investor to replace me. Now, the challenge has been that in the last, decade, we haven't seen too many secondaries happen where the investor has gone without the company being sold, right? Now, I would say in the last 2 to 3 years, you're seeing more and more of that. You're seeing it across KKR buying out Warburg, Warburg buying out Nexus, somebody else buying out somebody else, right? So that, you're right, that in some ways, it is a matter of also where the market was. That market is also now becoming a lot more mature. And so if you believe the...
So, Karthik and I are just stepping out for 10 minutes. We'll come back when you're done, okay? Yeah, okay. So,
we will have children by then.
Yeah. So I'm actually
I'm
just moving to an entirely new area, and I'll begin with Karthik this time.
No, just,
We managed to
at one
really
point.
screw him up.
Totally, I'm like breathless.
So one macro point again,
Yeah, right.
I think we started this ecosystem in 04, 05, 06, whatever, right? And we've continued to...
for a little longer, yeah. We've been around for a little longer.
Little longer, no, I'm saying at scale, right? Where there were multiple players, the tiers were being built. My limited point is and valuations were not crazy, fund sizes were not crazy back then. I'm saying all our learnings seem to be based on West Coast models, right? Both on, and to his point on the fund, but I'm not saying that the entrepreneurs are not at fault here as well, right? Entrepreneurs are crazy, perseverant, nervous, insecure folks. We make it worse because of all this paperwork and new terms and jargon and all that's fine. But where's the other end of the contract? Where are the great stories? They're also emerging. You can't read some bloody Airbnb, founder giving some gyan and then put that gyan back on me as an investor. So collectively as an ecosystem, we are very, very nascent, and we are in the 70s of the valley, 80s of the valley. Fine, we can accelerate things a bit. We know how to read the West Coast blogs. There were no blogs back then. But you can't behave like you're like the 2015 Valley entrepreneur. And that ecosystem is corrupted by that kind of behavior on all ends. And that is the mismatch here, in my view.
Right, what I'm going to do? I'm going to go to an entirely different system. Whenever I'm doing sessions for entrepreneurs, and there is this thing about, all these VCs always tell us not to do copycat business or copy and paste business. So, yeah, so I'm going to come, all except few. So what I tell them is, what? If you say that Flipkart is a copy of Amazon, which it obviously is not a complete copy, then there's a different way of viewing it, as opposed to, the story about domestic problems, solve Indian problems, etc. And I then tell entrepreneurs something which resonates a lot with them. I said, barring free charge, all of the biggies really have a model that you could, probably say they copied from. So VCs probably are saying, and this is an accusation to all of you, that VCs are telling you entrepreneurs that, hey, you don't go and be a copycat, but I will, right? So is this, so for example, Sandeep, why I want to begin with you on this? Because I have talked to you as long ago as 6 years back when you were giving me the example of Make My Trip, about how you were party to that. So I think on the one hand, surely nobody can say be a copycat, okay, throw that out of the window. But I think that somehow we have gone to the other anti-session because these same models that could work globally, let's say in retail, etc., could work here. What is your take on this copycat?
So to be honest, Make My Trip was a follow-up on Expedia and Travelocity, right? At that time, we looked at it and we said, what are the things that are working in the US that can work in India? And the idea came from, us, right? We incubated, deep at eVentures and sort of built that out. So I would say we were responsible for that copycat approach. Now, the other thing that it's a peeve also, right, is you always ask this question of the entrepreneur, where else have you seen this scale, right? Because you're sort of trying to prove that, hey, if it scaled elsewhere, it can scale here, without saying you are building a copy, right? It's not that you're saying that you build a copy, but you're saying, where else has this kind of thing scaled? What are you effectively asking? You're asking, okay, give me what is your, primary model that you're copying. So I think there is some risk of that is still happening. It's very hard. I think Mahesh has a valid point that it's very hard to sort of take an economy that's 1/10 or 1/12 of the US economy and try and build a business of similar scale to a US business in the same time in a market that is much more value oriented, that doesn't have the purchasing power and so on, with and the expectation from the entrepreneur is to get the same valuation and the same capital that the US counterparts are getting. It just can't, either you take 1/10 the capital and you spend 1/10 the capital to build a business 1/10 the size, because the economy is 1/10 the size.
So, so my take on this is, I'm reasonably, I can stand hand on heart and say that, I don't think many of my businesses have been copycats with a Red Bus or a Chumbak or a, you name it, My Dentist or whatever, right? They haven't, right? Okay. So, why does this happen? Let's again go into that. So there are, maybe we've had the benefit of having a fund that was entirely Indian, and we are not a branch of any US fund. Many funds in India are branches of US funds, and they're the franchises, right? So in many cases, the fund managers want to say, you know what, I want to cover my ass. तो मतलब e-com, broad e-com, चलो मैं भी एक broad e-com. Food, मैं भी एक food, मेरा भी एक food, right? चलो कुछ local delivery, चल, I also want to have one, because if he's doing it, I also want to show it, because I want to then say that मरेंगे तो सब मरेंगे.
Basically, VCs are just not intelligent. Is that what you're saying?
No, I'm saying you can either have an employee mentality.
Other than Mahesh.
No. I'm saying you can either have an employee
really,
mentality.
what you're really talking
So this
about
is a senior this is an employee mentality where you say, I don't want to lose my job, right? I have to be able to say that I'm benchmarked to everybody else, because it's like saying they all went wrong, so even I went wrong, right? Because you don't want to take a different decision because there's enough pressure on you. And I think if you're independent, you have the ability to not do that. You don't need to benchmark yourself as everybody.
What you're saying, sorry to interrupt you, is very scary, because I wouldn't even want a public markets mutual fund manager to think like this, that let me, basically mimic the Nifty or something.
If you go look at Pru, the guy who runs a Pru mutual fund, or who runs Reliance, say, actually sit back and say, boss, I have to do better than Sensex, I have to benchmark against the others, right?
But you're saying as an industry that is a malaise?
It is.
Right?
Because
so as an industry, because we have like 3 participants of industry on stage today, so I'm not pointing at anybody.
No,
So
I think there's a mix. I don't think it's that one-sided. I think everybody has a mix. The oddballs are difficult to fund and believe in. It takes a little longer. Nexus has built a brand just around, focusing on cross-border B2B companies, like, entrepreneurs who have worked and delivered great startups in the US, and then now can leverage the Indian engineering base and continue to build great products. We've done some crazy stuff. I think there should be more crazy stuff. But then what we discover is that the value chains for that are not built because it's so young as an ecosystem. And unfortunately, the dependency on maybe 10, 15 brands of VCs in the country is so high in our market that's what alarms me on a daily basis.
So the second part, to add to Sandeep's point, which I agree, which is it's hard to sit back and try to match a US return on an Indian economy. There's a second issue, which is, again, the difference between Russia, China, India. This BRICS theory people have, ki jo US mein chalega, chepo Russia, chepo China, is that unlike Russia and unlike China, where, I've talked about this often, the Google of Russia is Yandex, the Google of China is Baidu, the Facebook of Russia is VKontakte, the Facebook of China is Renren, but the Google of India is Google and the Facebook of India is Facebook. The reason for that is, unlike Russia and China, we have an open economy. We don't have, politicians who come in and say, well, you've got to have Putin in or the Politburo in and we'll let you in. We are not protectionist, right? We are, in some ways, I've said this and people have gotten pissed off, we are like the 51st state of the US. Like the second California in the US. So we have to, for our businesses to win long term, we have to build something out of the line of sight of the other guys. Facebook, there's no point in me trying to build a mingle box to go up against Facebook. There's no point in me trying to build a Guruji to go up against Google. I stay out of the way, go build something else on the side. Right? To me, that is just.
So I'm going to
I think it goes back to your copycat issue. I think one of the things that has happened, you spoke about Flipkart, Snapdeal, I think all of effectively what we did was we spent in collective $2-3 billion educating the Indian consumer on how to use Amazon.
Okay.
How to use Amazon.
Wow. That's very interesting.
That is what we did.
Business plan he's saying is, I'm going to spend $3 billion on how to use Amazon.
Right.
Because effectively you brought people on board, and once the people were on board and they were buying in a certain manner, and Jeff Bezos and Amit Agarwal sitting there saying, hey, now we see a large enough ecosystem for us to enter and take this market.
So what I'm going to do? We have taken 45 minutes when we were budgeted 30. This is true about VCs. They really take more than they were allocated.
Come on, tell him we are worth it.
It was
Age to 30 is
yeah, I took 42 of those 45.
overflow from the other
So what we're going to do is we'll give the audience feedback to the speakers. How many of you enjoyed listening to Mahesh and think he added value to you? Okay, how many of you think you enjoyed listening to Sandeep and he added value to you? How about Karthik, Reddy? How many of you enjoyed listening to what he had to say? Cool, so thank you very much guys for being here. It's been a delight, and thanks to NASSCOM for giving us this pride of place in being the last session of the day, and it's been so great being with all of you. I hope you enjoyed all three of the Anti-gyan panels. Please give a very big hand to all of these speakers, please.
Thank you, Ajeet.
Thank you very
That was
much.
amazing.
Thank you.
I think you did a fantastic job.
Thank you.
Three sessions in a row.
Yes,
Thank you.
thank you. Thank you.